Okay, we're looking, this is a Minister in Finance, and we're looking today at self-employment, Social Security, and income taxes, as well as legal advantages of ordination. I have a more extended treatment of this on Screencast-O-Matic. I had a guest lecturer come in last time, and I talk about that and recorded the lectures. But I'm going to give the short version here and refer you to the longer version there if you'd like it. So, if you've ever worked a regular job where you've got a W-2, you are used to that employer withholding both Social Security tax and income tax. If you are a minister, you are considered self-employed, even though you may receive a W-2 from the church. And as a self-employed person, you are entirely responsible for withholding your own income tax and Social Security tax as a self-employed person, which usually amounts to between 15 to 20% of your gross income. Many pastors, when they first start, forget that, and then they are walloped with a huge tax bill, and that's a problem. Now, so being aware of that can be helpful. Oops, I didn't mean to do that. Let's go back. On the other hand, there are some distinct advantages that come to being ordained. So if you are ordained, formally licensed with some group, that gives you the right under IRS code to have a conscientious objection to Social Security. Social Security is a form of retirement, and the nature of a person's conscientious objection, as far as the law says, it only has to be a sincerely held belief. Okay. If you choose to exercise that conscientious objection, then you do not have to pay Social Security tax. You have to file a form every year indicating that exemption. And then your entire retirement is totally up to you. There's going to be no government benefit to you, which also limits your access to Medicaid, Medicare, and the whole social financial network that the government provides. You do not have to exercise that option. There was a time when once you'd exercised it, you were out forever, and the government opened the window back up for ordained ministers to opt back into the system. And I would need to read what the current tax law is, because things change consistently. There is a book that's, I believe, in your bibliography that something like the Minister of Tax Law that is issued every year, so that you're abreast of what the tax laws are. Now, if you're ordained, one of the benefits of being ordained pastor, ordained minister, you do not have to be a pastor to be ordained. Okay. I'm ordained, I'm not a pastor, but by virtue of being ordained, I could, if I chose, designate a specific portion of my income as what's called parsonage allowance. And whatever is designated parsonage allowance is not taxable. Now, this cannot be done retrospectively. You can't come to the end of your fiscal year and say, well, I spent this much money on furnishing, providing for guests, maintenance, and so on, the house. I'm going to designate that. Now, the church has to designate it for you. You have to have a church designated for you ahead of time. So, let me give you an example. In a pastoral setting, it's very easy to have a board say, X amount of money is going to be designated as parsonage allowance. If you spend over that, tough luck. If you spend under it, then you just count as income the portion that wasn't spent. In the case of a non-pastoring ordained minister, I have a form that I can take with me, for example, to camp meetings or revivals, and have the treasurer sign this form that says, we recognize that Philip Brown is designating X percentage of the money we're paying him as parsonage allowance. And by retaining that form, I then show pre-planning, right? The money hasn't come to me. I've been told I will be paid this much. I can designate 100%. 100% of this will be parsonage allowance.
And that's income you get from preaching at revival.
Correct.
That's okay.
Yeah. So it's income coming into me, but it's tax sheltered in the sense that it's not taxable. Okay. Now, if I'm going to designate it and count it as non-income, then I have to have done the due diligence to maintain receipts and evidence that the money was in fact spent that way. Okay. So I haven't been willing to do that kind of diligence because I don't own my own home. When you own your own home, then your mortgage payment, as well as furnishings, lawn care, maintenance, anything that goes into maintaining the dwelling or domicile becomes fair game. And I don't remember whether utilities fall under that or not, but they may. You buy a new washing machine, you have to buy a refrigerator. So you can imagine there's a potential for a great deal of sheltering of income because you spent it.
Right.
Now, careful attention to that particular opportunity, as well as attention to your charitable giving. So my parents' experience. So Dad was a pastor, ordained minister for a good many years, and they owned their own home. They were making payments on the home. Okay, the church designated that home as the parsonage. Okay, so all expenses associated with that. They hardly ever paid income tax because once you subtract that out, the standard deduction would have been more than the charitable giving that they were giving, so itemizing wasn't necessary. And in my case, the standard deduction, there was a point in time at which the standard deduction was less than I was giving. It's raised to the point where it's now more than I'm giving, and there's no point in itemizing. So I've backed off on keeping track. But one of the things that's done for me, so I've kind of shifted focuses here from parsonage allowance and reducing income to another way to benefit yourself on your income tax as a minister, and that's itemizing. This is available to anybody. One of the downsides of itemizing is the IRS used to accept a canceled check to a charitable organization as an adequate form, but they no longer do. You must have a receipt from the charitable organization stating explicitly the amount of goods you received for your charitable contribution. So no goods were received for charitable contribution. And if you do receive goods, so let's say you gave $50 to God's Bible School and they sent you a CD worth $10, you can only count $40 of your contribution as a charitable contribution, right? One of the constraints that puts on charitable giving is if I'm helping this person in my church who clearly needs help and I'm doing it charitably, they aren't an organization that can write me a receipt as a 501c3. Now, there's a bit of slipperiness here that goes on in churches. The typical route around this problem is to give money to church and suggest that the church meet this need. As long as you suggest and you do not designate, then the church has free will in making the application. They could choose not to follow your suggestion. A second way around this problem is by having churches designate specific funds. We have a Help the Browns fund. We have this kind of fund that is open to all people to give to. And I can designate the Brown fund. I can designate the building fund. I can designate any fund the church board establishes.
As long as it exists.
Yes, as long as it exists. And then there should be parameters for the disbursement of those funds by the church rather than just being freewheeling, kind of a pass-through shelter. So with those understandings, that's one of the ways that a tax receipt is acquired for income tax purposes for lay or ordained persons. But if you handle your income properly as an ordained minister, you don't even have to worry about that since your income is going to be low enough that the standard deduction will be greater than your giving. Okay, so I mentioned at the beginning of the class that there is already an extended lecture, 2 extended lectures on this topic. One is the Minister in Finance, Housing Allowance, and Tax Sheltering, and that's I will place those links. Actually, probably I can do that right here. I can drag this down to Minister in Finance. Classes student accessible. Oh. Okay, there's Minister in Finance, Housing, and Allowance, that video. And there's a second one, Housing Allowance and Social Security for the Minister. And I will take that as well and stick that in So those two links are available for your viewing in the future should you desire them. You can also download the links to keep them for future reference. Looking now at a document that's available on the class Google Drive, the Minister and Tax Law. Here's an excerpt from Guidestone Financial Resources that gives the answer to the question, who is a minister for federal tax purposes? And ministers are individuals who are duly ordained, commissioned, or licensed by a religious body constituting a church or church denomination. They are given the authority to conduct religious worship and administer ordinances. Okay. They have eligibility for housing allowance, and they can have dual tax status, self-employed for Social Security tax purposes. Okay. They only apply with services with respect to services performed in the exercise of ministry. So you are not a self-employed minister when you're working your second job for UPS or lawn maintenance or whatever. Okay. The church can designate the portion of its compensation as housing allowance. The secular employer cannot designate any portion as housing allowance. Okay. Like I said, it has to be done in advance. You have to keep careful records, suggestions for how to do that. So the key point here is that most ministers are considered employees for income tax purposes and receive a W-2, but self-employed for Social Security tax purposes. And that's what seems so odd. Okay. And they report their employee business expenses on Schedule A rather than Schedule C. So there's some examples there. So there is a what's this say here? Yeah, I believe I've covered most of that information, but you can read it for additional. How do ministers pay their taxes? Ministers must prepay income taxes and self-employment taxes using the estimated tax procedure. Okay, so that's quarterly prepayments, unless they've entered into a voluntary withholding arrangement with their church, which applies only to federal income taxes. Okay. The minister's wages are exempt from federal income tax withholding. That means that a church does not have to withhold income taxes from a federal paycheck. Since ministers are self-employed, does not have to employ Social Security and Medicare taxes. Okay. What we do at Burlington is we just pay those quarterly payments for the pastor ahead of time. Okay. But that requires a certain level of comfortability and responsibility on the part of the church treasurer. So, for example, if your income or deductions increase unexpectedly, you should refigure your estimated tax liability and amend your remaining quarterly payments accordingly. You will need to make estimated tax payments for 2015 if you expect to owe at least $1,000 in tax after subtracting your withholding and credits. Okay, so that was the 2015 threshold, $1,000. You'd have to go back. This you have to check every year. All right, there's step-by-step guidance here that I'm not going to walk you through. All right, we're looking now at texts that describe our attitude and approach to wealth. How should we view wealth? And we did discuss this some previously, but I want to pick up on specific texts that we haven't covered. So if we look at 1 Timothy 6:17, instruct those who are rich in this world not to be conceited. So we have the danger of wealth-producing conceit. Specifically, nope, that's not the right thing. What do I do? I hit shift. Shift enter takes me down with that, but I wanted. There we go. Conceit. Hope fixed on riches. We can, the duty of those who, of the rich, is to be rich in good works, be generous, ready to share, future focused. Psalm 62:10. If riches increase, do not set your heart upon them. So avoid allowing your expectations and hopes to be fixed on increased income. Christians are liable to greed, according to Jesus. We must take active steps to guard against its multiple forms. Every form of greed. Specifically, we will be tempted to think of this sounds like everything's gone. Life is gone. Okay. I heard those exact words from a Louisiana resident when the flood destroyed all their property. They lost everything. We lost everything, life's not worth living. There's a clear example of a person whose life consisted in their possessions. Ephesians 5 names greed again. So we can say it this way, quoting Paul, Christians are liable to greed. It should how would we say in modern language, it should not be named among you?
Right. Lack of evidence is a different
Right.
effort.
Free from the love of money? Now, we were just talking about that last time, weren't
I believe so. So I wonder if there were some notes that could persist.
we? I don't remember typing those notes in this document, though. So, love of money evidences itself in discontent. Because if you're free from the love of money, you will be content. Freedom from contentment. Should be focused on the promise that Jesus forsake us. So, scripture prohibits get rich quick pursuits and intents, I think. Though it doesn't proscribe unintentional windfalls, so to speak. I think we can further say that God promises to punish those who seek to get rich quick. With poverty.
And the last people who are faithful.
Yes. How would you paraphrase what's being said in Proverbs 23, 4, and 5?
Don't give your life to making money.
Okay.
Don't make that what you live for.
Mm-hmm.
You will be disappointed.
I would say don't spend wearying time and energy in pursuit of wealth. Don't allow it to be a mental focus. Now, let's, this Matthew 6:19 seems to be in contrast, seems to be actually in contradiction with Proverbs 6:1 or Proverbs 6. Maybe it's verse 6. Verse 6. Go to the ant, you sluggard, consider her ways and be wise, provides her meat in the summer, gathers her food in the harvest. Do not store up for yourselves treasure on earth, where moth and rust destroy, and where thieves break in and steal, but store up for yourselves treasures in heaven. So, how do we balance what's being said in Proverbs 6:6 and Matthew 6:19? Okay, here's my suggestion. Proverbs 6:6, the ant stores up food for the winter. This is short term, anticipated, and regular expenditure.
Right. You anticipate using up what you save.
Right. Yeah. With the anticipation of consuming and replenishing it again. Okay. Treasure would be what? So, if I'm a business person and I've got $2 million in the bank, but that $2 million is operating capital that I plan to use, invest, work with. $2 million is a lot of money, but it's not treasure, right? What about retirement? Well, if my plan is to say, here I've got a long-term anticipated cost where I will be spending this money and I'm saving so that I have when I get there, those are the winter years of my life, that seems to be a Proverbs 6 thing. On the other hand, so then what are the criteria that allow me to identify treasure and distinguish it from projected savings?
Seems like treasure would involve what you're setting your hope in, right? Like the earlier passages we looked at.
Okay.
Talked about.
Well, don't I hope to spend that money when I'm retired?
Yeah. That's for sure.
So how is that different than setting my hope on treasure?
Well, Jesus says here where your treasure is where your heart will be, what your affection is on. So, like the quote you had from that story about the people in Louisiana, it's kind of the same. It seems like you use the same quote to illustrate treasure for them.
Okay. I play the devil's advocate. The prudent man foresees the evil coming, hides himself. So I foresee a general economic collapse. I know that during times of economic collapse, stocks become worthless, some banks default, I'm purchasing gold and silver because they're commodities that retain their value to be insurance against that potential thing that I see coming down the road. Is it the basis of my security?
Depends on your attitude toward it, I think. Okay. So if somebody were to break into your house and steal every gold bar, where would your heart be?
Yes. Yes. I really do think that's at the heart of it. So I am paying for life insurance. I think it's a waste of money. On the other hand, should I die, having $250,000 would ease the transition into widowhood for my wife. So I view it not as my hope or her as her hope, but rather as an act of love on my part that I trust never comes to fruition. So the attitude, and this is why I think Paul says beware of every form of greed, because attitudes can shift. They're not concrete, they're malleable. Things can slide. And we need to hear these texts occasionally and do little checkups. If all that I've saved went away, poof, would my world collapse? Or am I just as happy without it as I am with it? How do I react inside when I imagine that? Do I think of it as catastrophe, a life-threatening, collapse, or different? I think here in Mark 4:19, we get an additional element where he calls the deceitfulness of riches. Okay, and I would view this phrase in the same way as I view Paul in Romans 7 saying that the law provokes sin. Okay, is the law sinful? Oh no, he says it's not. How is it that this good thing became sin to me? Well, it reveals my heart. Riches are the same way. You bring them into the human heart, and it shows its deceitfulness, its proneness to greed, to dependence, covetousness, okay, so on.
That lines up with Lemuel's prayer.
Yeah.
That deceitfulness never be exposed to him.
Correct. Yeah, that's a great cross-reference, Proverbs 30. And that's verse 6. Not 6. Verse 7 through 9. Praise not to be rich, lest self-confidence replace God-confidence. So, wealth can choke out spiritual life. Leave us unfruitful. All right.